I've got Matthew from VanEck here with me, and I thought a good place to start would be this quote from one of your recent research reports. And, I think a lot of the audience may be in kind of the same boat as me as I'm tired of hearing all this election talk, but I thought this quote, it really stood out to me because I hear a lot of doomsday kind of talk about the election. And I'll go ahead and read it, which it says, regardless of the election outcome, the trend of growing fiscal deficits and rising national debt will likely continue. This suggests a weakening of the US dollar, a macroeconomic environment in which Bitcoin has historically thrived. Can you unpack this a little bit for us and kind of elaborate on this idea that the whoever wins the presidential election doesn't really matter? It's kind of bullish for Bitcoin in both scenarios.
Yeah, sure. Good to be with you, Mitch. The way I look at it is that there's a structural deficit of trust in the world. You can see it very clearly in polls of US citizens asking them about the legitimacy of various institutions. And whether that's mass media, education, government, it's all at an all-time low. So people are beginning to connect the dots on how our reckless monetary and fiscal policy plays into the debasement of money and allows the government to basically spend on a bunch of nothingness that doesn't make the economy more productive, but instead creates like alienation. And some of that alienation, finds its way into Bitcoin. And if you, we did a piece a couple months ago with this kind of multi-million dollar price target for Bitcoin. And the main gist of the piece is that eventually central banks are going to own Bitcoin at an approximately 2.5% weight. That's very small compared to the gold allocations or the US dollar, which is like 2/3 of central bank reserves. And that Bitcoin will start to be used as a medium of exchange in global trade, specifically for large ticket items like commodities. So I think that comment is just an acknowledgement that for the rest of the world, in particular, there's strong demand for more consistent monetary policy. There's a lot of disillusionment with how the U.S. is exercising its foreign policy and how censorship of the dollar plays into that. U.S. sanctions are up 500% since 2009. So a lot of the world feels cut off. And what we did is we noticed that there's a very strong correlation between the value of a country's currency and its use in cross-border payments. Um, and that there's also a correlation between the use in cross-border payments and the relative GDP growth of that country. So let's look outside the US at Japan, Great Britain, and the EU. These countries are facing a lot of the same structural issues that the US is, if not worse, on fiscal issues. And their relative share of GDP has fallen pretty dramatically over the last 20 years. We think that's going to continue. We would argue that their currencies are kind of punching above their weight given that recent deterioration in relative GDP. So where will the world look to save money? It'll either be this like dollar milkshake theory that dollar will continue to take share. Um, we think Bitcoin will supersede that, right? And so there's also a possibility that the world goes more into the Chinese RMB, like that. That's one possibility. I think it's going to be in the U.S.'s interest to forestall that, and Bitcoin would be the kind of the happy medium. So, in that sense, many of the structural issues are baked into the cake. Whoever wins this election. That's not to say I don't think there'll be a big difference in the performance of like Bitcoin versus certain altcoins, or the magnitude of the rally, say in the first like 1 to 3 months after we know who the winner is. But at least for Bitcoin specifically, our conviction is doesn't change too much depending on who's president.
Start mining Bitcoin today at marketplace.blockwaresolutions.com. Yeah, I tend to agree with that, and we'll circle back to kind of your thoughts on how the outcome may shake things up in the near term. But it's I'm glad you brought up this idea of distrust across all systems, right? Because that's personally what brought me to Bitcoin. I found Bitcoin in late 2020, and obviously that was a hectic year. My trust in systems was at an all time low, and I can imagine much of the audience feels the same way. So, what then? I guess the kind of status quo idea now is that a Kamala presidency would be bad for broader crypto versus a Trump presidency might be great for crypto as well as Bitcoin. So how do you kind of think about that? And where do you see the market heading in either direction based on who may win kind of that first 3 to 6 to 12 months?
Yeah, so in the last cycle, 2020 cycle, Bitcoin dominance peaked at 70% right around the election. And then by the end of November 2020, it was down to 62%. And like the altcoin rally was in full force. That happened obviously with a Democrat, Biden, who was elected, although you can argue that the market didn't really appreciate how hostile he was going to be, right? So I think what my base case here is consensus, but uh, we're going to get a risk rally once we have a winner, right? And that could take some number of days or hopefully not weeks. But there's always a relief rally once we know for certain who's the winner. That should, extend to Bitcoin. And then from my perspective, like depending on the setup right into the election, whether it's been very weak markets or strong, uh, altcoins may bounce, but their degree of outperformance will be much bigger under a Trump victory. And that's a situation where I would probably, make a move and change my positioning once the facts are clear that Trump is a winner. I mean, the guy owns like 5 million plus of Ethereum. His wife gave an interview on Fox over the weekend to Maria Bartiromo, plugging her art, which is has an NFT,
Hmm.
on Solana. So she was really excited about her various NFT projects. I just think it's going to be much more wide open, and there'll be a hope trade for until the personnel of the new administration is known.
That's interesting. What do you think about Bitcoin dominance? Because it's obviously been on the rise over the last 2 years, with a lot of the institutional capital finding its way to Bitcoin through the ETFs. Could you foresee another bull market where perhaps instead of having this massive alt season, Bitcoin dominance just continues to rise and Bitcoin outperforms everything sheerly by just institutional capital going into that alone?
Yeah, I think under a Kamala Harris presidency, that is quite plausible. I could see a if alts are weak into the election day because the polls are showing that she's going to win, and then let's say she wins, you might see some type of like pain trade relief rally just because of the certainty of we know who a winner is. But I think over the next 6 months, unless there is much more forceful action on removing Gary Gensler as chair, communicating a new approach towards the asset class, then yeah, I think it's quite likely that Bitcoin dominance continues to go higher. It's the regulatory certainty there will be quite differentiated.
Hmm. That's interesting. Well, at Blockware, we're Bitcoin only, so it gives me hope that regardless of what happens in November, our personal business will be okay. Let's shift more towards kind of a macro discussion here. We obviously saw Bitcoin respond very well to the first Fed rate cut, as well as the stimulus that's coming out of China. Do you kind of expect global liquidity to rise over the next 12 months, and to that be a primary driver of risk in general?
Yeah, we're definitely noticing a pickup in global M2 and Chinese M2. As you probably know, Bitcoin is a chameleon. Its correlations with assets change over time, but the most persistent correlations are a negative correlation with the US dollar and a positive correlation with M2 and money supply growth. So those conditions seem to be well set. The problem is that Bitcoin's correlation with the NASDAQ right now is quite elevated. It's actually back to late 2022 levels. So while I'm happy that Bitcoin joined the rally, right when China cut, allocators want to see that correlation come down. You may remember BlackRock when they first brought out the ETF. They said that they had kind of delayed it internally because the period in 2022 really spooked them when the
Hmm.
correlation between Nasdaq and Bitcoin was so elevated. That's not why allocators are buying it. They don't need just another risk-on asset. So in order to really kick off the parabolic stage of this rally, which, as you know, is like it should be now,
Yeah.
we need to see that correlation fall.
Yeah, that's interesting. So you're kind of thinking asset allocators really want to see Bitcoin kind of be this safety hedge against uncertainty that kind of maybe gold has played that role. Is that kind of what you're thinking here?
Yeah, I mean, it doesn't have to be on a day-to-day basis. There's a lot of volatility in the asset. So, if it move, when we saw the Iran tensions heat up last week, gold and Bitcoin moved in exact opposite directions. That on a daily basis, that's not ideal, but folks can stomach it. But when that persists for weeks, months at a time, like we've had here in August, September, it implies a lower allocation to Bitcoin because you're, by definition, getting beta to risk in other parts of your portfolio. Um, yeah, I would also just kind of highlight that when we look at who has adopted Bitcoin post the ETFs and who those buyers have been, it's really been more hedge funds than regulated investment advisors or
Hmm.
pension funds. Now, some of those advisors have allocated, and the pension funds, Michigan, Wisconsin, Jersey City, like they get splashy headlines. But in Q2, hedge fund holdings of the Bitcoin ETFs were up 40%, 40.
Hmm.
Investment advisors holdings of the Bitcoin ETF were only up 4%. So the hedge funds are trying to front run what is hopefully a more thoughtful, asset allocation approach that the advisors are going to take. But unfortunately, the big national brokers and banks haven't put out that air cover, the macro models, these 60/40 models that will include Bitcoin and kind of give the investment advisors the cover to put in a 1% discretionary allocation for their clients. So that's been a little bit slower to materialize than I'd expected. Maybe if this correlation comes down or prices at all-time highs, it obviously would probably suck some more capital into. But that's really what we're looking for a more broader institutional adoption rather than just hedge funds playing the cash and carry trade or front running these larger allocators.
Yeah, that makes sense. And I certainly thought that would come much sooner. I thought as soon as we get these ETFs, there would be more consensus on, hey, maybe 60/39/1 is the way to go instead of just 60/40. And so
Exactly.
yeah, I think once that happens, I mean, we should at that point start to see really consistent flows into Bitcoin. Do you think if that sort of future materializes, we could see the end of these massive bear markets? Because I feel like the bear markets are when you have this massive surge of FOMO, but people don't actually understand Bitcoin. They're not planning on holding it for the long term. And so they get spooked out all at once. You get these massive drawdowns. But if Bitcoin finds its way into kind of general portfolio theory, then maybe we don't get these massive bear markets. What are your thoughts on that?
Yeah, there's kind of reasons to argue both sides. The pushback to your call is that these larger allocators are quite disciplined in their rebalancing strategies. And so, if you put in Bitcoin at a 3% weight and it doubles, you got to take some out
Hmm.
next quarter. So that would definitely continue some cyclicality. But just as the asset gets bigger, it's harder by definition to get an 80% drawdown. So I think the drawdowns will be smaller, but I do think this will continue to be a cyclical asset.
Yeah, I tend to agree. Speaking of cyclicality, we're about 6 months past the halving, which has historically been that kind of aha moment where the market really starts to kick off. We haven't seen that yet. What do you think about Bitcoin's halvings kind of being a driver of these bull markets? And, at what point, like how much longer do we have to stay at 60K before people can kind of say, hey, all right, maybe that having cyclicality might not be a thing going forward?
The halving puts a focus on miners to make sure that they stay competitive, right? And I think that dynamism is important for the ecosystem. So what we saw post the halving, an initial boost in transactions and fees to try to capitalize from like what people hoped would be a big price run up. When that didn't happen, the hash rate fell off by like 15%, which was like bang in line with what we kind of expected. Um, you can see from the data that miners were selling coins post the halving for much of the summer. And that selling also coincided with some kind of one-off estate selling, the German government, the US government, a couple of bankruptcy estates that had to sell coins to repay. Um, uh, so that, I think, really contributed to the divergence that we've seen between Bitcoin and gold, is
Mhm.
one-off selling by miners who had to adapt to the halving, and then some idiosyncratic like government and bankruptcy related selling. Now that's behind us, and I think we're set up for a good catch up. But um, yeah, I think that Satoshi set the halving schedule intentionally, putting it in election years when there is generally a lot of turnover in policy, when the young tend to take power from the old, and where, if you look at history, like money supply growth is also better in election years.
Mhm.
So it, just by itself, the halving is not enough, but when you add in these other elements, it contributes to, I think, kind of a creative destruction in the space that removes the dead brush like a forest fire, and then kind of sets us up for a sustainable rally. And if you look at the Bitcoin miners, they in September or August, started acquiring coins again. They basically had repaired their balance sheets from the post-halving disruption, and now they're selling less coins, or in some cases even accumulating coins. So I think the setup is pretty good here.
Yeah, I definitely agree. And I love to view Bitcoin mining as the most competitive industry in the world because there are no bailouts. It's a pure free market forces, right? Every miner knows that the halvings are coming every 4 years, yet some still come into it unprepared, right? And only the miners with the most efficient rigs and the lowest cost power are able to survive that immediate drop in revenue. And I think, now we're starting to see hash rate recover a little bit. We saw a pretty significant capitulation over the summer, but we're starting to see that hash rate come back online. Some of these newer generation machines are starting to hit the market. So I think I definitely agree. I think that the tides are going to start turning here very quickly. Plus, you kind of have the inverse of that situation we had where a lot of there was native Bitcoin selling pressure with some of the Mt. Gox coins or whatever. But now we have the opposite with the FTX money's getting refunded, but it's getting refunded in dollars, right? And so some of that may come into Bitcoin as a little buying pressure here in the short term. Yeah. So another point you made raised in some of your recent research I thought was very fascinating is that equities, they've obviously performed great this year, but capital raised through IPOs is down significantly. It's on pace for about 68 billion in 2024, which is a 31% drop from last year. What do you make of this, and why is there such a stark contrast between overall equity performance and IPOs?
Yeah, I think it's a multifaceted dynamic. The number of public companies and the number of IPOs has basically been in a downtrend since the financial crisis, as the private markets have kind of taken share from public markets. It's more expensive now to be public. There's more regulation. For a few years there was this insane ESG focus that was just completely dilutive to executive focus and shareholder returns. M&A is also at a multi-year low. Like 43% of the S&P is under antitrust investigation. So it's actually very hard for some of these deals to get done, right? Like
Mhm.
you had an airline merger where Spirit Airlines was going to be bought by JetBlue. The government said, no, you can't do that. Now Spirit's going bankrupt, right? Amazon tried to buy iRobot. Government said, no, you can't do that. Now iRobot like laid off 30% of their staff and is going bankrupt. So I think a lot of it is policy, just unfriendliness to capital, and executives making the decision to just be more private in every sense of the word, right? Like we can look at information censorship, financial censorship, a lot of reasons to kind of keep your cards closer to your vest and avoid the public markets. Um, Tokens are obviously the like exact opposite of that. It's like
Right.
instant capital formation and it was, well, some transparency in some things. Obviously, there's a lot of opacity in others, um, but yeah, I think it's disappointing to see new business formation down, IPOs down, M&A down. Um, I think the election could change that if it goes a certain way.
Yeah, that's. I mean, it's as you were explaining that, I instantly thought, yeah, tokenization could actually probably fix this and allow capital to be raised in a more, I guess, elusive manner, as long as there's transparency around it. And a lot of I saw today, I think crypto.com got served with the Wells notice for unregistered securities. So
But they
certainly,
just responded and sued the SEC for arbitrary and capricious behavior, so they're going on offense as well. Good to
That's
see.
good to see. Yeah, I mean,
Yeah.
the SEC hasn't exactly been very successful in a lot of these lawsuits over the last couple of years. I
Yeah,
want
I
to
mean, but
talk
just
about.
to like extend your comment on capital raising and tokenization,
Mhm,
unfortunately, right now there's not really a path to raise large amounts of equity in tokenized form because there's no real place to trade these um, token securities.
mhm.
So, unfortunately, we need legislation, we need rulemaking, and I wouldn't. Yeah, I wouldn't in the near term. I wouldn't look at tokenization as a salve for the lack of capital markets activity.
Yeah, yeah, I think there. I mean, there definitely needs to be some sort of regulation around that to protect the consumer. But we'll see how that shakes out. Right now, I definitely have all my focus on Bitcoin and changing the money. And I think a lot of kind of the faults we see with the current financial system and capital markets is downstream of the fact that the money itself is broken. So I think fixing that's the lowest hanging fruit, and from there things should start to get better overall across all of markets, because when the actual core unit, the blood of the economy, which is the money itself, is broken, of course it's going to cause problems everywhere. I want to get into mining stock because at Block we are a mining company, and there's been a lot of interesting developments over the last year with AI. And kind of the best performing mining stocks this year have been those that have pivoted to AI, namely Core Scientific, TeraWulf, Iron. Do you expect this outperformance to carry over into a bull market if the Bitcoin price goes up and kind of pure play Bitcoin mining becomes a lot more profitable? Do you think some of these other mining stocks may catch up?
Over the short term, a violent Bitcoin rally would, I think, change the complexion of which mining stocks are working, right? So for traders, if you think Bitcoin's going above 90K, which is basically the point at which the newer mining machines, you'd have like a 2-year payback. Right now the payback on these newer mining machines at current BTC prices like 4 years.
Hmm.
Like, is very little incentive to upgrade. The useful life of these things is like 4 years. So it's not a bullish backdrop for pure play Bitcoin miners right now. And if you're looking at a multi-year investment through the cycle, you want a miner who has a low cost of capital so that they can actually afford to upgrade these machines. Because at 60K with a 4-year payback, none of them can really afford to do it. So how we think about it is diversifying the end market exposure and most importantly, bringing down the cost of capital. All these miners have bad balance sheets, frankly, and they need to either sell equity to expand or issue debt. There's no appetite to fund a Bitcoin miner in the debt market because of what happened last cycle, where all the debt was written off and restructured, and a lot of bankruptcies in the space. You lenders will lend for project financing. For Bitcoin miners, but that's very small scale. They are interested in lending against data center leases. So that's an opportunity to monetize some of the megawatts that these miners have, bring down their cost of capital, and then use that better balance sheet to create a more diversified company. So in the short run, maybe, and actually, if you look at the tape like this month, it's kind of been a buy the rumor, sell the news type of tape. The best performing miner is Riot. Riot's been, among the most obstinate in sticking to the Bitcoin only strategy. The CEO gave a call last week to Wall Street where they signaled that they may be changing that strategy. They got a huge facility in Texas that could be appropriate for converting, and just that you know kind of modest comment by the CEO is enough to have the stock up 10%,
Mhm.
whereas TerraWolf is down 14% month to date. They're actually executing on their AI strategy. They sold a Bitcoin mine, freeing up capital to fully build out some of their high performance and AI compute. Stocks down 14%. So the market is sniffing like who's going to be the next one to pivot,
Mhm.
because there's that much value creation. But if we take a longer term view over the cycle, I think the more diversified players are likely to outperform unless Bitcoin enters like an extreme parabolic scenario that lasts for some time.
Yeah, I like the way you position that because I think pure play Bitcoin mining, it is a lot about timing when you enter the market. And so I don't necessarily think, I'm bullish over Bitcoin over the next 12 months, right? So I think a lot of these pure play miners will do very well in the short term. But going back to this idea that mining's the most competitive industry in the world, we have these massive bear markets. Mining difficulty is going to continue to rise, and so you need to have diversified revenue streams. And so it makes sense for a lot of these businesses to kind of branch out into AI and to be able to survive those massive drawdowns in the Bitcoin price without your operations kind of going underwater. So I think, yeah, it's super interesting what's going on here in the mining space. And one company I want to hone on specifically is Mara. So back in August, they raised about 300 million through convertible notes, and they used most of that to purchase spot Bitcoin, kind of an imitation of the MicroStrategy play, which has obviously been successful over the past few years. What are your thoughts on this move by Mara?
Yeah. So Marathon is the worst performing Bitcoin miner year to date, or close to it. And they've really kind of zigged while the rest of the market was zagging. Um, they've been quite transparent that they have little interest in the AI story, and they're going to compete on um, using the Bitcoin mining process to make other parts of people's businesses better. So monetizing, stranded methane, creating a Bitcoin layer two, using some of their excess energy to mine a, smaller proof of work coin called Caspa. You know, differentiation is good. So, there may be some buyer who's interested in that. And of course, as you noted, like doubling down on the HODL strategy, raising debt to buy Bitcoin. It's just that, oh, and the other thing that they're doing is on the margin, they're moving away from the US, right? They're saying that
Mm-hmm.
power prices are rising in the US, new site prices are unattractive. Let's do deals in the UAE, let's do deals in Kenya. Like, I'm super interested in that nation state adoption. 7 countries now mining Bitcoin at the central government level. Mara has been like instrumental in 2 of those countries, frankly. So they are doing God's work. But for a U.S. based equity investor who wants um, the best possible governance, to operate in countries with clear rule of law. Like, on the margin, when companies go outside the US, it probably decreases the multiple that investors are willing to pay for the stock.
Mm-hmm.
So it's a unique and differentiated strategy. It needs a different type of Bitcoin market to have the stock outperform. It needs a parabolic Bitcoin market.
Yeah, it definitely seems to be what they're banking on. And I can also testify I'd much rather invest in companies that are fully based in the US. There's just a lot more regulatory clarity in my mind. What are your thoughts on, because you mentioned, 7 nation states mining Bitcoin? Long term, really zooming out here, what do you think the future of Bitcoin mining is? Is it going to be kind of this hash war software idea where nation states are competing for hash and trying to secure their ability to add blocks to the chain? Like, what are your thoughts on, will every stranded source of energy have a Bitcoin miner? Like, are we just going to see hash rate and difficulty go parabolic to the moon? What are your long term thoughts on the Bitcoin mining industry?
Yeah, if you look at Bitcoin mining right now, you have roughly 15 listed companies that control 30% of the hash rate. Okay, that 30% is an all-time high. It was 20% a couple of years ago.
Mm-hmm.
So the listed universe has really taken share because of the lower cost of capital that is available to publicly traded companies. Uh, the other 70% of the market, well, you guys probably have some of the better data around on it, but it's very opaque. It's very hard to make a cost curve that commodity analysts make in the oil market, say, and try to figure out like who's mining Bitcoin at a break-even rate of $80,000 right now? How much hash rate is operating at, you know, unprofitable levels?
Hmm.
Very hard to tell.
Yeah.
Uh, some of these strategic miners, and I'm just throwing out like names that are new to the market, like Kenya and Ethiopia, where there's so little transparency around what they're called. I mean, we know Ethiopia's built this huge hydro dam, like $10 billion project. Bunch of Chinese miners came and hooked up. Electricity prices are low, but we don't have the transparency really of what the costs are for the government in mining. And you just don't know how committed they're going to be to it when the price goes down. It's beneficial because it gives a country like that, which is negotiating with the IMF for a bailout, access to hard currency, US dollars, right? They can mine the Bitcoin, sell the Bitcoin every day and get dollars. And it's hard to get dollars into a country like that. And that's very valuable. And that's why, you know, Bhutan and Oman and the UAE and Argentina and all these countries are starting to do that. Uh, but I don't think that they're going to be like but given the amount of electricity that it takes, some of the kind of domestic news flow that needs to be managed when you hook up a Bitcoin mine next to a hydro dam in a country where people earn $1 a day, like it raises a lot of questions. Like, why isn't that electricity going to the people who don't have it? And for that reason, I don't see like a um, nation states hoarding Bitcoin capacity. I just see
Mm.
them as diversifying, you know, starting mining to exploit some of that stranded energy and just getting like a toehold. Even in the countries like El Salvador that went the legal tender route, it's still not the primary currency. So it's an absorption. It absorbs entropy both from energy and from the kind of disillusioned society that we talked about at the outset.
Yeah, that makes sense. Kind of, you know, an ancillary service of government, if you will. Matthew, I really appreciate you taking the time to come on the show. Is there anywhere you'd like to send the audience to keep up with the research that you're doing over at VanEck?
Yeah, sure. Thank you for the opportunity. We put out a bunch of research, a monthly piece on Bitcoin, on the rest of the digital asset space. If you follow me on Twitter, Matthew underscore Sigel, or follow the VanEck corporate account at VanEck underscore US, you'll find all of our research. Or go to vaneck.com. You can subscribe to our research and get it via email.